Hi, I'm Brad.
I'm Meg.
And
welcome to the Millennial Report.
We've ended the week with a series of all-time highs for the Nasdaq Composite. Yahoo also hitting a 52-week high yesterday. And so naturally the investor has to ask, what's next?
And while we won't speculate where exactly the markets will continue to move, what we can guarantee you is that on today's segment, we'll touch on how millennials can use the markets to our advantage when planning for retirement.
It's out there in the future, the distant future, but just for you, the viewer, we're going to kick off this Millennial Report ongoing series called #Life Goals, because obviously if there's Bay goals and squad goals, then there's got to be life goals. So today we're kicking off the life goals discussion with a special guest, Bill Chetney, who is the founder of GRP Advisor Alliance. Bill, welcome to Nasdaq.
Thanks very much. Great to be here.
Definitely.
Absolutely. Now, so you're the founder and CEO of Global Retirement Partners Advisor Alliance.
Right.
Say that 10 times fast, right?
That's right. You did very well.
So thank you. So tell us about your organization and what you do in the retirement industry.
So there are 75 million people that have a 401k plan, and there are 300,000 advisors that work in the financial services, but a very small percentage, 2,000-3,000 that are truly specialists in the retirement space. So our group is made up of those. We have over 5,000 plans and over 185 billion of assets, again, primarily in defined contribution or 401k plans.
401k plan, that's a word I know of.
There you go. Cuatro Cero Una Ca for the Hispanic community.
Very nice.
We're brushing up on our Spanish here today too. There's so many facets
We're
that we're
always
touching
here
on.
to educate you guys.
That's right.
That's what.
So the big question here today on the Millennial Report is, how are millennials doing when it comes to retirement?
Well, they're just beginning, right? So it's 18 to 35, so they're the earliest part of their career. They're not in their highest wage earning. So those that have the opportunity to invest in the 401k plan, we see adoption, but obviously you can always do more. And as you grow and your income grows, we'd like to see them put a higher percentage.
Right, and I guess as a follow-up to that, is there anything that sponsors can help them do to plan and save more and really put a strategy around how they're building towards some of those higher income years that they're about to step into?
Right, it's a great question. There's the biggest, I think, detriment or barrier to anything is inertia. And so advisors are recommending plan sponsors put in basically automatic enrollment. Right. So when an employee becomes on, rather than having them elect in, they are opted in and then have to elect to go out. And once people are in, they find out they're really not any more broke at the end of the month, and they stay in the plan. Further, they have programs where they do auto escalation. So if someone starts off putting 2 or 3% of their income in, and a year later they end up with 4% being put in, and it escalates up to maybe a target of 10 over a number of years, that'll really get them to a secure retirement. That type of thing is a less painful way to get to the desired savings level.
Gotcha. So advice like this, and kind of outlook. What is GRP and your investment advisors doing to help millennials save for retirement already?
Right. So. Our primary responsibilities are with the plan sponsors. So getting them to adopt more plans and then to adopt these features. Again, auto enrollment, auto escalation, and then also a diversified investing approach. So with a fund menu of 10 or 15 options, it can be daunting. So currently, probably the most popular is a target date fund. It's not adequate, but it's better than throwing darts at a wall and trying to pick funds.
What type of investments make sense for millennials who are starting to save?
Two best things you can do when you're investing is diversify and invest for the long term, and to put in money on a periodic basis. Right. So you kind of complete all three of those. You're putting money out of every paycheck, you're investing for 40 years, and if you get into a diversified portfolio, again, target date, target risk, managed accounts, these are the kind of the investments of the future. I think that millennials, because they have such a large timeline, they can afford a little more risk. Right. So maybe rather than an S&P 500, here comes a plug. How about the Nasdaq 100, right? A little more growth oriented.
We like that little shout out.
I want to be invited back. Okay? But no, it's in all seriousness. I mean, the S&P 500 is a large blend and maybe suitable for one type of investor, but in general, a longer term investor could afford more risk and then achieve more growth.
I'm always reading about how, there's a whole retirement crisis brewing, and millennials, the whole generation are, going to be to blame in a way. And, can you give our audience a few tips on what we can do to kind of mitigate?
Right. Well, there's always the doomsayers, right?
Yeah.
I think it's more difficult for old people like me, baby boomers. We started 401k plans 10 years ago,
Right.
not 40 years ago. So I think that it's just getting engaged early, staying consistent. You're not likely to have the same job for 40 years as you might have in our grandparents' generation. So stick with it, either leave the money in the plan, roll to a new plan, or put it into an IRA, but don't take it out and buy a bass boat. Right?
Yeah, no, exactly. I know I switched jobs a little while back,
Right.
and I still have the 401k sitting at my old job.
Right.
And I know there's I guess right now I don't feel an immediate incentive to roll it over, but I do sometimes. I'll be sitting there and all of a sudden I'll remember, oh wait, I have that other account sitting,
right.
kind of out in the, I guess it's cyberspace, because I certainly haven't logged on
Right.
in a while, and this is all very embarrassing.
And haven't changed your investments.
No, I
Yeah,
haven't. I
right.
definitely haven't touched it. And I'll get notifications in the mail on how the fund is doing and things
Right,
like
right.
that overall. But I honestly, it's one of those things I haven't touched because it seems so far
You
away.
don't feel like the Lone Ranger. That would be the majority of people. And I'll meet even with high-level executives in financial services, and we'll be talking about a particular concept, and they'll say, "Oh yeah, I've got one here. I got one here. I've got one here." So it's a very common to have that. The thing that I like to have people think about though is where is it invested. So it can
Yeah.
stay in another plan, but where is it invested? And we talked about these things, the target date funds. And while, again, they're better than throwing a dart, they're not adequate, right?
Right.
Can you imagine a financial planner coming to a customer and saying, how old are you this year? And they say 27. And say, how old are you going to be next year? 28. Good. Well, that covers this year's and next year's review. I'll see you when you're 29.
Yeah.
Right?
Yeah.
So it's not enough. I mean,
Right.
again, it's diversification, but maybe I should find out if you got married, if you had kids,
Right.
your rich aunt, all of these
changes?
other things that happen.
And I've also heard that I'm supposed to be more active now, or more. I take higher risk right now with my fund and in the way I design it. How long should I be doing that for in terms
Right,
of when
right,
I
right.
plan to retire with that dartboard we talked
Right.
about?
So it's an interesting investment concept. Is it to or through retirement? So we're going to make up this magical age of 65. We're going to retire when we're 65. So that means I manage my risk to retirement. So at 65, then I go spend it all, or is it
Right.
I'm going to live to 95
Right.
or 105? So I'm going to invest so I can still, if I have a 30-year time horizon when I'm 65, I can still manage significant additional risk.
Do you think 65 is an actual age that a lot of us will see retirement at?
I'm optimistic,
Yeah.
internally optimistic, but the reality is a lot of people's retirement plan right now is a greeter at Walmart, or would you like to supersize that?
Yeah.
Okay, so it's part-time jobs to supplement.
Right.
Now that's a kind of a negative way of looking at it, but a positive way of looking at it is this concept of retirement is really a bizarre and new concept. Who retires? Okay, in the 1800s you didn't retire, in the early 1900s you didn't retire.
Right.
We hit this thing called Social Security, and people were going to retire. Okay, I was really fortunate. I retired when I was 40.
Wow.
Okay, now did that. I hung around for a couple of years, and I said, "What am I going to do? Like eat the rest of my life? Play golf?"
Honestly, though,
Right. So I mean, if we think about it from a lifestyle standpoint, why it's more. I'm going to live and enjoy and do, and part of that might be maintaining some income production, right?
Yeah.
And I tell you, if you're married, your wife will say something like my wife said to me, which is, "I married you for dinner, not lunch." Okay.
Ah.
So, anyway, that's kind of a different spin on what's the retirement date.
yeah,
Absolutely.
I'm going to go ahead and give retiring at 40 the hashtag life goals. I'm going to go,
That
if we're
is-
giving those out,
Look at
I'd
that.
like to
Hashtag
be
life
the
goals
first.
acquired on Bill's part.
Right.
Yeah, exactly.
So well done there.
Yeah, thank
and,
you.
and it's a question that I have to ask because obviously, as we're setting these goals and these benchmarks
Yep.
that we're pushing towards, not only is it what are we putting away, but how are we facilitating those conversations with the companies that you work at too, to make sure that you're A, making enough to be able to start putting things away,
Right.
and then B, actually have a strategic plan mapped out so that enough is being pulled out of that then paycheck
Right, right.
to be put into that retirement fund.
And I think that's kind of a segue into a bigger topic, which is how are we communicating, educating, and what are we educating millennials and the rest of the working population on? And so financial wellness and financial literacy is an emerging concept, just as health wellness
Right.
was, right? Eat less cheeseburgers, go to the gym once in a while and quit smoking, you have a happier, healthier, more productive workforce. Same thing with wellness. So financial stress causes as many sick days and detriments to a worker than as does physical wealth.
One of the statistics that you pointed out from the Wells Fargo study on the millennial retirement crisis
Right.
was that 71% of millennials say that they would value a financial coach in helping them understand the complexities of their retirement plan.
Right.
Now, not all of us feel like we're in a position yet to have, a coach
Yeah.
in that way, but the thing is, you also, I'm a big proponent of education in the workplace.
Right.
Having
Right.
these plan sponsors come in to better explain to me what my options are, and honestly, even walk me through the website.
Yeah.
And
Well, that's the, first of all, it's a great reverse plug because one of our big passions is financial wellness in the workplace because it didn't happen at home, it didn't happen in the schools, and now we have an opportunity.
Right.
And so part of it is what is it that you want to be learning about? So maybe you don't have $1 million that you're investing, but you might be buying a house, and you might be saying, what's the difference between a fixed and a variable mortgage, and should I lock in? So the financial education and what that might be for different generations is going to be different when you're in your 20s, 30s, 40s, and so on.
right.
You touch on housing. That's a different topic that we're
Yeah,
going to say.
yeah.
Home ownership
Okay.
is going to be for a future segment, but we certainly do thank you for being here today, Bill,
Appreciate
and
it.
really giving us some great insight on how we can begin to take those next steps and planning towards retirement as
Great.
well.
Well, it's been a great pleasure. Thank you.
Thank you again.
Appreciate it.
#LifeGoals.